Hey everybody, Mark Zachary with Next Step Home Loans. Hope you're doing well. Next Step Home Loans is a mortgage broker shop based here in the Houston area, but we can do loans all over the state of Texas. So if you know of anybody looking to purchase or refinance, we sure would appreciate you passing out our name and contact information to them. We'll take great care of them and get them through this mortgage process. I get a lot of questions on inflation and how that works in regards to mortgage rates. And so I wanted to shoot a quick little video for you, maybe a little bit longer than normal, but I hope it's some good information for you. But inflation actually is just reducing your buying power, and it does have a negative effect on mortgage interest rates. So the feds do like to see the inflationary rate around 2%, not much more than that, maybe 3%. And because if you start getting, above that, then you're going to start seeing some significant changes in the interest rate. So as inflation goes up, the value of your dollar goes down. So your purchasing power goes down. So if you're out looking for, if you're out buying a grocery basket full of products and you have $100, well, that $100 may fill up that basket today, but in 5 years, 10 years down the road, you may only get to fill that basket up 50% of the way with that $100 that you had, or 75% of the way. The bottom line is you can't purchase as much product in 5 years with that $100 that you can purchase with that $100 today. So that's how that works. So if I'm loaning you $100,000, and I see that inflation is getting out of what the feds like to see, which is the 2-3%, mainly around 2%. If it's getting out of control, then I'm going to build in some risk factors into my interest rate. So I'm going to raise my rates to cover the losses that I'm going to see over the lifetime of that loan, because I know that the $100,000 that I loan you today is not going to be worth $100,000 down the road. So I'm going to increase my rates. So that's why we're watching closely right now is what are the inflation numbers. Tomorrow, we're supposed to get those inflation numbers, and it'll be interesting to see what they are and then how that will impact our mortgage interest rates. So how does that happen? What causes it? When the feds lower their Fed fund rate to 0 or close to 0%, that means that banks can borrow from the feds money at 0%. They will then turn around and loan that money out to you and me and whoever to buy cars, to buy furniture, to buy anything on credit that will be cheaper now than it was 6 months ago, than it was a year ago. So the feds aren't injecting money into the economy, but they're lowering the rate in which you can borrow the money, so the bank will actually, provide you more money to buy things like that. That's why you're seeing people, and me included, getting a car loan right at 2%. So car loans are lower, credit cards are lower, furniture financing things are lower. So all of that is lower, but it doesn't necessarily correspond with your mortgage rates. So why do the feds do that? When the economy starts to slow down, they need to spur on some activity, so they lower the Fed fund rate so the banks can do what I just explained to you. Now, when the economy gets cranking again and things get really hot again, then the feds are going to eventually raise their Fed fund rate to slow down the economy so it doesn't take off too quickly. So anyway, that's a little quick lesson in Economics 101 and Fed fund rates and inflations and mortgage rates. Hopefully I didn't cause more confusion than I helped answer questions. But if you do have any further questions on it, certainly give us a call and we'll be glad to answer anything about that. One more point I'd like to make is you'll also see employers that will normally give you a 2 to 3% inflationary pay raise every year. So your buying power in year 2 with them is the same that you had in year 1 with them. So they try to keep up with inflation by giving you 2 to 3% minimum pay raises every year, just so you don't lose money by working with them. So anyway, call me if you have any other questions. Always here to help any way we can. Have a great rest of your week. We'll talk soon. Take care, everybody. Bye-bye.